All right, so we're back at it again today. Remember there that discount I mentioned last night's video ends tonight. I decided to give you one more day just so you can be able to know about it as you're watching these videos. But that will end tonight for any of our free subscribers looking to check us out with the discount to our monthly subscription. So if you haven't got that email or that subscription, if you haven't already subscribed and don't have that email, let me know. Subscribe to our site for free and we can get that out to you here tonight before that coupon code expires. The market continues to be a tale of two different markets. Like on one hand, you have this large cap tech. On the other hand, heavy kind of financials, industrials, materials, small caps, growth and value. Just really like two opposite ends of a spectrum that sometimes they go together, but right now they are not going together. So we're going to talk about the ramifications of that and what else is not really going together, what other divergences are showing up, and what that means. How long can we be bullish in this kind of environment before it just can't keep going? Have we seen this before? And the answer, of course, is yes. And what happened then? Does that mean the world's going to end? So we're going to break all that down in today's video. We're going to take a look at a stock that is doing well. It's kind of having its own little breakout, in this case, to the upside. And considering the market environment, these divergences, can we trade any stocks to the upside right now? And the answer, obviously, to that is yes, too. And so we'll talk about that at the end of the video. So let's go ahead and get started. Today is Wednesday, July the 7th, 2021. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, well, let's start off taking a look at the S&P 500 with the Market Forecast Indicator. Another new all-time closing high today, all-time intraday high as well, and another day with a long lower shadow. So it doesn't necessarily mean that we have to be bearish. You can see there are some lower shadows here before we turn around. There's lower shadows there. It just means that, again, the bears haven't been around in the last 2 days. They have been. That's all it means. It doesn't mean that they even have the upper hand because we close at the high of the day, so they don't have the upper hand. When the bears come out early, that's great. It's when the bears come out late in the day that's when you get the long upper shadows, and those are very bearish on bullish trends like this. So we're not quite there yet. Keep in mind this near-term rally we've been on here. We've got. It started on this day, so this is the day that we crossed above 50. We were at 45 right there. So 1, 2, 3, 4, 5, 7, 8, 9, 10, 11 days. 12 if you include that day coming off of that low point. So since the June expiration of options, that quadruple witching, we've had 1, 2, 3. We've only had, 2 down days out of 12. So 10 up days, 2 down days. That's what it looks like on this chart. SPX here. There's your 2 down days, and then there's your 10 up days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And look at all the gaps to the upside too, and pretty much mirroring what we're getting here. And in fact, if you go all the way back to in this direction, look at all we had a gap streak of 1, 2, 3, 4, 5, 6, 7, 8, 9 gaps to the upside there. And then followed by another streak of 1, 2, 3, 4, 6, 7, 8 out of 9 days. So you had 17 out of 19 gaps to the upside. Then you had a few little gaps here, and then now we're back 1, 2, 3, 4, 5, 6, 7, 8, 9 out of 10 gaps to the upside. So out of all these days, we've had 1, 2, 3, 4, 5, 6 gaps to the downside. And the rest of it have all been gaps to the upside. So if you come up here to the top, and you'll notice from this day, from May 20th going forward, most of the gains from May 20th going forward have occurred overnight, right? So the gains, if you match up the gains down here with what we're seeing up here, it pays to trade overnight. In other words, buy at the close, sell at the open, because there's not much. In fact, that's where you get the long. Closed end candles. So we haven't seen as many of those lately. We used to see they're right here, kind of a bunch of them here, lots of filled in candles here as we would gap up and then come down in all these days, and obviously had these down days there. We haven't seen a whole lot of filled in candles here, especially on up days. That would be the black candles, where we get the filled in candles on up days. We've only got really one of them right there. But open candles, very strong bullish near term run. But again, at least the bears came early, so they're in the vicinity. The bears are in the vicinity. They're just not showing up late in the day, which is where they're really a danger. So as a result, you almost got another cluster. Your momentum line is above the 70th percentile. So we had that over here. We had that for a couple of days in a row right over here. We're at the 69th percentile there, 75th here. So we're at the 71st percentile. I mean, again, about as close to a cluster as you can get on these. Of course, the NASDAQ did get a cluster a couple of days ago, and we did get a filled in candle after a gap to the upside this morning. That's what actually kept the momentum line down, because we're actually off of the high of the day. The Russell 2000, on the other hand, continues to get down days. Like, that's 3 down days in a row now, and you can see the bearish near-term high. The intermediate line's about to cross below 60. Most likely by tomorrow, it's going to, barring a big update tomorrow, it's most likely going to cross below its market sentiment and below 60 tomorrow, which means it'll be out of the bullish territory. Now, it won't be bearish. It'll still be kind of in neutral. So just kind of watch for it to get below 40. So that's the Russell. And then, of course, the Dow, which did have its own little intermediate pullback, but never did drop below 23. It's kind of like the Russell 2000. The Russell 2000 had multiple periods where it looked like we were going to have an intermediate decline. And in fact, you had brief dark pink shading and a red line, but you never crossed the 23% line. Did that again here. As a result of that, even though it kind of looks like it was an exhale, dropped below 40 on the intermediate line, but we never did drop below, out of noisy territory, then we never really got an intermediate pullback. And also, you notice we never got new highs either. Well, that's what's happening on the Dow Jones. We got what looks like an intermediate pullback in all regards, except for we never dropped below the 23% line. So we're still in noisy territory. And as a result, now we're not getting up to new highs. We're kind of holding these old highs, so far at least. The near-term line's down. Looks like it might make a run below 60 here. So this is a QQQ-led market. I'm going to show you a few things here later in the video. It's definitely a QQQ-led market. We're definitely still in a bullish market. Some areas of the markets are really bullish. Other areas aren't so much. And that's kind of having an impact. Regardless, the posture is still strongly bullish on the intermediate line and strongly bullish on the market sentiment line. And the near-term line is also strongly bullish, being up above now 11 days and up above the 80th percentile. And then this kind of quasi cluster with the momentum line not quite getting above the 80th percentile, but getting close, right to the 70th. You can see again kind of a quasi cluster over here that ended up being kind of a short-term peak, not necessarily an intermediate peak, but it actually was an intermediate peak for other indexes, but not for the S&P 500, which again is now going into its 9th month without an exhale. So that means the S&P 500 has been holding its breath, has inhaled and has been holding its breath for 9 months, and the typical time frame is 1 to 3. So we are, we hit the 3 mark, we've inhaled, we took a deep breath in the 3-month mark, and then now 6 months later we're still holding that breath in with a nice little rally here. Now other areas, we've let some breath out. Like I said, on the Dow Jones a little bit there, and the NASDAQ, of course, these two, and the Russell, a little bit there too. So that we're letting a little air out a little bit here and a little bit there, but we haven't had that full-on quite exhale yet, as you see on the S&P. All right, before we look at some other charts, I invite you to subscribe to our YouTube channel. Mouse over this icon here in the bottom right corner of your screen. Hit that red subscribe button that pops out. There's also one down below the video if you're watching us on YouTube. That notifies you when our videos are posted. Also, while you're down there, hit that thumbs up icon. That tells us 2 things. You liked our video today, and you want us to do another video again tomorrow. Quick way to give us feedback if you like our videos. Of course, if you don't like our videos, you don't have to click on anything. You don't even have to watch it. But if you do like them and you want to let us know and you want us to keep doing them, then let us know with 1 click. You can do it right now even while you're watching. that thumbs up icon down there. Also, comment. What did you get out of our videos today? What stood out to you? What questions or comments you have about anything I discussed? Post those in the comment section. Join our website at marketscholars.com. There's a link popping out up there in the top right corner of your screen. Click on that link to subscribe to our site for free. Follow me on Twitter for more content in between the videos from day to day. There's my handle right there at DavidSettle42. And join our Market Outlook Facebook group that we've created. All right, if you're watching us on our blog here, check out some of these other things on the right, including our Market Outlook live video as well as our trading rooms. Of course, tomorrow we have our Q&A session. That's for our premium subscribers. I have one as well on Saturday morning. But all the rest of these are available for all of our paid subscribers. Remember that 4th of July, discount that ends tonight. That is for our Plus subscription here, our monthly subscription. You can click on pricing to see the difference between the two. But all of our subscribers get access to all of our trading rooms and our Market Outlook live videos. Again, these videos are the ones where I review all the trades I've done in these Market Outlook videos, and I put on today's trade idea already before the market closed in that live video as well. And to see those, you can click on this image here or just come up to live trade review and click on that. Come down here and click on this heart. It opens up a new tab. Hit this like button right there. Also click on this thumbs up icon, opens up another new tab. Click on this like button as well. Again, the more you do that, the more people will actually see. You can see we had more people like us last time, but still, in terms of reaching people that follow our accounts, the more engagements it has, the more people will see it. And so that's why we keep asking for you to like these. It also benefits you because Twitter and Facebook will promote the content in your timelines from the accounts that you engage with the most. We try to make it really easy for you to engage with us right here while you're watching. All right, now let's take a look at the weekly charts. Again, very strong candle, and we're just pretty much right at the high of the week, so not even very much of a long upper shadow. And again, those shadows tend to get shorter and shorter as you get more and more bullish, just because you start to fill in that range. So we'll just kind of keep our eyes on that. Again, the PPO is about as high as it can possibly be. The PPO for the NASDAQ is actually ramping up a little bit, but it's much lower than where it was, even though the candles are getting bigger again here. Of course, the Russell 2000, we're actually getting a bearish candle this week, which is and a red arrow, which is significant on this particular chart, significant of an intermediate decline. So you can see we got one on the Dow Jones a while back. We've got a couple of them here lately on the NASDAQ, and we didn't get one on the S&P since the last time we got one on the S&P was last September, October there. So we haven't had one since. But it kind of gives you an idea of what's going on in the Russell 2000, and again, breaking into that moving average eventually can fill in that gap. Obviously it didn't these first two times. We'll see if this third time is a charm on the Russell, and if that's telling us something more about the broader market as a whole. Let's take a look at the 3 green arrow charts, and you can see we do have 3 green arrows still. The MACD actually histogram turned back up today, so a renewed sign of momentum. You can see that strong MACD there, well up above its moving average. The stochastics moving average is really, really high, so it's not very much higher that the stochastics can actually go. If you look at the IWM, it's a different story. IWM actually has a negative MACD now, hence the potential for the pullback, right? Because that's actually a sign of a pullback if you're just looking at this particular indicator. The stochastics is also below its moving average. You can see the lower high points on both of these oscillators as it rolls over. And then you can also see up here that both the 8 and the 17 day, not only are we below the 17 day and staying there, which is a relatively bearish sign, but unlike this period over here, the 8 and the 17 day are both crossing below the 30 day moving average. So a relatively bearish sign from that perspective as well. Again, pretty much opposite of what you're seeing on the Qs, when you're about as bullish as you can possibly be here on the MACD as well as on the stochastic indicator. Looking at some other oscillators, again, SPX back above 70 on the RSI, still above 100 there. NDX showing most of that strength above 76. Again, last time we were this bullish on the NDX was that peak there in September that preceded that broader intermediate decline. Of course, the Russell 2000, different story. Right now, it's still in the neutral zone. It's not bearish yet, but it's really kind of knocking on the door of being in that bearish territory and being back below negative 100 here. So looking at the directional movement index, you can see the strong move there on SPY. Not as strong as what we're seeing in the Qs. The Qs, this ADX is back above 25 here again for the first time that we've seen here for a while. The positive indicator up to really high levels, the highest levels we've seen since last August expiration, preceding and post August expiration. This negative indicator again at its lowest levels that we've seen since back here. So very, very similar period. Remember, the ADX is lagging, so you know, even if we stop going up on these or stop spreading apart on these two indicators, the ADX will still move up to a relatively high level. Again, vastly different than what we're seeing in IWM, where it's the opposite. We're above 30 on the negative indicator, and we're below 20 on the positive. That's a directional breakout move, in this case to the downside, with the ADX at really, really low levels, setting up for a possible breakdown. If you look at its Bollinger Bandwidth, the second consecutive day now we've been in the lower quartile, flirting with breaking below its point of control here, versus the Qs, which are well above its value area and still easily in the upper quartile. So vastly two different markets that we're seeing. One very heavily dominated, like 50% of the Qs are made up by those 5 companies: Facebook, Microsoft, Apple, Amazon, Google. They make up about 50% of the Nasdaq 100, whereas of course they don't have any exposure in the Russell 2000. And we're seeing, and these are, you know, have other sectors that make a bigger have bigger weightings here than within, especially the Nasdaq 100, but also especially the S&P 500. So a tale of two different markets right now. You can also see it here in the intraday charts where the S&P, you know, again, still hasn't filled in that gap there from, it did fill in Fridays, but not last Thursdays, and is trading above its value area, which is rare, but it's above its value area. The point of control way down here at 423.5. You can see something similar on the Qs. Very high above its value area, point of control not so far down, basically right where we fill in that Friday gap that's already been filled in on SPY. But IWM is actually below its value area on the 4-week chart and well below its point of control, and been giving us lower highs and lower lows until today's lows, kind of seeing whether or not it's going to break down below that low point that we had a couple weeks ago or not. So again, tale of two different stories here. If you take a look at today's range, volume at 63 million, the range not as high as it was yesterday, 3.25 points. If you take a look at that in context, 3.25 points is just about where the average is right now. Very, very low relative to the price. I mean, well below 1%. This is extremely low trading ranges right now. And then the volume's a little bit above the average, and that's kind of showing up too, because you can see in this discrepancy between historical volatility and implied, which is so large. We saw that, you know, again over here as well in August and September, where the historical volatility got about as low as we are now, and implied volatility was ramping up. We also see that too in the trend. The trend over the last little bit has been ramping up as well. Here, let me find it. It's right here. Here's the trend. You know, last couple of days up about 1.5. These are really, really high levels, especially considering it's a bullish market. And when you're rallying, typically a trend is down when you're bullish. But for us to be rising right now with the trend pretty high too, again shows that there's fewer advancers and more declining volume than there are decliners relative to the advancers. So that's, you know, that's not a surprise, right? A lot of breadth indicators. If you look at, you know, here's all the stocks at 20-day highs minus 20-day lows. In fact, if you look at all these stocks within the S&P 500 that are at 20-day highs right now, just straight up 20-day highs, a lot lower than what we've seen in March and April and May, when we were above the 1 standard deviation, really bullish. Now you can see not so bullish, and you look at, you know, how many stocks are above their 50-day moving average, and we continue to show some weakness there, back below 50% as of yesterday, well below the mean over the last 2 years, where we've been above the mean this whole time that we've been bullish, and a big divergence showing up there. So, you know, the breadth indicators are all there. You know, with this jump, extreme kind of parabolic jump here in the Qs, with a very high MACD, a very high PPO, about as high as we'll see. In fact, if you go back even just the last 5 years, the PPO for this particular indicator, you know, it got really bullish there with the COVID, but outside of that level, we are really close to 2 again. And we've seen that happen a couple of times or 3 times in the past year when we've got about to this level. One was back here in, what was that be? That would be last July. And then there's that NASDAQ peak where the whole market peaked in September. And then we had our intermediate decline. Then we had this where the Russell kind of ran out of gas there in mid-April. That's the last peak there. The Qs underperformed a little bit, but we had a pretty decent run off of that March low point, and now we've gone parabolic again. Very high CCI above 200, very high RSI above 70. None of these others had hot levels that high except for right here, this last July, when the Qs really started to lag behind, peaked there, and then started to lag behind the Russell 2000 before ultimately peaking, where everything peaked there in September. Let's take a look at the volatility chart. Let's see, right over here. And you can see the VIX is kind of, you know, we jump after jumping below 15 last week, we jumped back above 16 the last couple of days, and we're holding up there, and we closed today below 80%. So even though we're higher, we're still at an extreme low point on volatility. Being below 80% is an extreme low. It's not as extreme as we were last Friday, but still is an extreme low that suggests there's upside risk to volatility, a lot more upside risk than there is downside. Doesn't mean we have to actually experience it, because anything can happen, right? But it just means, what are the risks, right? Well, right now the risk to volatility is definitely to the upside. It doesn't even have to go all the way up to 100, 105%. It could just come up to 90%, as we saw over here. But a move like that, coming out of nowhere usually, is definitely a lot more probable. As you can see, we had a drop over here below 80% too, that led to that move going into options expiration in June. So potentially a similar type move setting up for a move going into options expiration next week for July. So to summarize the technical outlook, obviously the markets continue to be bullish because the NASDAQ continues to be bullish, and that's okay. We've had that kind of market before, you know, and it will go as long as it will take us, and then when it's done taking us there, then that's, you know, generally when we'll have some kind of reversal. And not a huge reversal, and the market's not going to fall off a cliff. When the markets do go down, it will not be the end of the Russell 2000 has gone down 3 days in a row. It has not been the end of the world. So don't get worked up about, you know, even if the TV tells you that this is a market sell-off. It's not a market sell-off. It won't be a market sell-off until at least we've broken that 23% retracement of the rally off of you know, that Halloween low point from last year. So we've got a long ways to go, and even then, that will just be the beginning of an exhale. So it's the kind of that's what happens when you've been holding your breath for as many months as we've been going on and just continuing to march higher here. So you trade how you trade. You trade with the stocks that can take you there, but you also protect yourself just in case. Like we've done, and you diversify with the types of strategies across the different types of stocks that we've been doing them on, as those in our trading rooms have experienced. We've been making a lot of money on some bullish trades, but we've also been making a lot of money on some neutral trades as well, and then, you know, some bearish trades have also profited on the types of stocks that haven't been doing as well lately, especially those small caps and those industrial type names. So what do you think? Do you agree with that assessment? Do you disagree? Let me know in the comment section below, especially if you disagree. What charts or indicators are you looking at from a technical analysis basis that tell you why you're a lot more bearish or a lot more bullish than I am? And share with us down below in that comment section. Now let's break down what's driving this price action. And let's just look at today first, and we'll take a look at some of these other aspects. And again, just look at today here alone and see what's moving the market today. Let's go like a 2-minute chart here. And then you can see, again, look at the risk off type move. Now, it wasn't as international stocks didn't fall as much. The developed markets actually were up 0.5%. The Qs were flat. The market was flat. Gold was up, but the dollar was up. Long-term bonds were up. And then commodities and small cap stocks were really down today, down another percent for IWM. Again, IWM has been down 3 days in a row. And, again, the market hasn't killed over and died as a result. As crazy as sometimes people get when you have a minimal, some declines here, multiple declines in a row. We're down, 2% total in the last 3 days on the Russell 2000. Commodities down 4%. International or emerging market stocks down 2%. The long-term bonds, a dollar, gold, all rallying here. As I showed you in last night's video, that relative strength between the correlation between gold and the dollar over the last couple of weeks has finally turned positive. I also wanted to show you this chart. So if I were to go back over here, you can see that really from this June 8th low, from June 9th on, is when the Qs really took off into this mode. So if I were to show you this chart from June the 9th on, there we go. Until now, we'll go to like a 15-minute chart. There's the rally in the Qs, but look at what else has been up this entire time. Long-term bonds, the dollar has been up. Gold has been down here because of the strength in the dollar, but you can see coming off of that low point, now they're moving in the same direction. So that's a risk-off play. Like commodity stocks, all international stocks are down. Emerging market or IWM is down 4%. The Qs are up 7%. IWM is down 4%. Commodities are down. Real estate, which had been so bullish, is down. So I mean, this is a pretty darn risk-off move. If you take a look here at like the Russell or some of these different asset classes, like long-term bonds, you can see now we're in the retracement zone. I mean, they're kind of going parabolic too. In fact, if you look at the DMI for TLT, the positive indicator, the negative's finally gotten below 20, but look at the positive indicator getting up above 40. This is the first time that it's been above 40 in a year, quite a long time. If you go out, 5 years here, if I were to go across, you can see the last time was pre-COVID, when, right before COVID, and then during the COVID drop is when bonds really made this kind of parabolic move. But you can see some other periods in 2019 where bonds made very strong rallies as well. That's what we're getting here. It's a very, very strong parabolic rally on long-term bonds. The trend is above 5 now and above 80, so very strong trend, well above the cloud from that perspective. If you look at the longer-term view of the weekly chart of this, which had been so bearish, you can see now it's above the blue line, still below the cloud, but it's above the blue line, and now we are, got a weak bullish trend going. So as soon as that trend stopped, a new one started. As soon as this trend stopped, a new one starting here, as of right now at least. So very, very strong moves, to say the least, going on here with TLT. You can see getting above 70 on the RSI, getting above 200 on the CCI. And again, you look at the weekly indicators for both of these, and you're getting up almost above 60, or like you're working your way up well above 50, but you're working your way back up. You can see well above 100 after getting above 200 over there on the CCI. So even the weekly indicators are telling you things are turning around for bonds. And of course, looking at the euro US dollar, you see a very similar move, right? The dollar, and look at the dollar keeps rallying, getting these clusters. This keeps pushing down towards these important support levels. And you take a look at, its directional movement index, and you can see a very similar pattern, right? The ADX is rising like a rocket. The positive indicator is dropping to extreme lows. So very, very low levels, or high levels, for the dollar and for bonds. And now we see gold finally making its own run too, in conjunction now with the dollars. It had been so bearish, but it's finally starting to work its way around. Let's go to the gold contract. Finally starting to get out of this reversal zone and potentially getting out from below the 40th percentile, getting out of this bearish territory and working its way up towards a bullish run again. Again, that would be a risk off type play, especially if the dollar continues its bullishness too. Not that I think the dollar is going to continue to be bullish in the long term. I just think in terms of, these other asset classes are in risk off mode, even if U.S. equities aren't, simply because the Qs aren't. And the Qs, remember, are half of 5 companies. Like half of the Qs is 5 companies. So it's really, really narrow market. In fact, again, if you take a look at like the S&P 500 here, SPY here, let's go back to that same time frame of, what was it, June the 9th, when the Q started to really outperform the S&P 500 going forward. Well, if I were to compare this chart to RSP, which is the equal weighted S&P 500, and then let's put on a price as percentage here, and then we'll take off that left hand scale, and for that matter, let's also take off the after hours trading. There we go. So from that day forward, from the time that the Q started to outpace, you can see that the S&P 500 really outpaced the, here, you got to be able to see the there we go. See that there's the RSP. You can see that, I mean, we were really outpacing the S&P 500. Well, again, from that low point, from that period, the S&P is up 2.7%. Equal weighted S&P 500 is flat. We see that in this chart as well, from one of our main members here that helps us out with these charts. Clarence Carr put this together as a reflection of the S&P 500 here, and let's just go like again, let's just go from that 6.9 level, 6.9 of 2021, staying on this day chart, so 6.9 up till now, up to today. So let's go to today. There we go. So there's the S&P right there, 3% or so. It's actually, yeah, there's a little bit of a down move on the 9th, but 3%. There is those 5 companies and how they've done, together, and then there's the rest of the S&P 500 without those 5 companies and how it's done. So again, you can see the big influence these particular companies are having on the broader market as a whole. And again, as I showed you last night, and I'll show you again, there's some light pink shading showing up, but still dark pink shading and red lines across the board. Even if you got light green over here in the UK, but you still got a red line. These are all bearish patterns across all these major economies and their equities, and we're not seeing it here in the US because of a literal handful of companies. Now, they're not the only ones. Like, we've been trading Adobe in our class portfolio, and that's been doing very well. We made a bullet. We're going to make a bullish trade today in our video here. There's been other bullish trades, so it's not just those 5 companies, but they are definitely exerting a major influence over even when you have stocks like these semiconductors, which have been they're a major component of the Nasdaq. They're not doing so well. One of those companies is Micron that we've had our eyes on. You can see trying to, looking like it might be breaking down below some very, very important support levels, and not necessarily the most bullish pattern here, while the Nasdaq itself is as bullish as it is. All right, now let's take a look at how these sectors are doing. And of course, I've shown you this before too, but let's just look at today alone, and then we'll look at this 3-day kind of weakness that we've seen, like I said, in the Russell 2000. But here's just today alone, and industrials and materials actually holding up pretty well today. Financials and energy really not. Energy being the biggest loser, and then 2/3 of your large cap tech space, XLY, XLC, both struggling the most. XLK actually holding up pretty well. That's just today. Let's go back to the last 3 days total, and then XLK is really doing well. Again, that's a big component of the Qs. XLY kind of matching the market here. XLC a little bit behind. Then look at financials, materials, industrials, energy really down this week, down 5%. Financials down 1.5%. Real estate and utilities ramping up, right? As bonds have been falling, yields or bonds have been rising. yields have been falling, and those sectors have been doing very well. So if we look at the sector grid, the 12 grid here, there's your QQQs across the top, and you can see just how bullish they are. Overbought clusters well above the moving average, dark green shading and green line. Not the case for energy, dark pink shading in a red line. Financials, dark pink shading in a red line. Materials and industrials are kind of flirting with bearish patterns, even if they're light green shading for now. Utilities and staples kind of doing the same thing. But then look at healthcare, it's kind of matching what we're seeing up here. Very, very bullish pattern. So you see where the strength in the market is, you see where the weakness in the market is right now. And that leads us to our trade idea of the day. So let's take a look at Starbucks. Starbucks is in this discretionary space, semi-staples. And you notice a very strong intermediate push here up into the 80th, above the 80th percentile. Dark green shading in the green line, diverging away. In fact, if you look at its 3 green arrows chart, you can see a nice little divergence here away from the moving average. MACD is rising to strong levels. So I mean, it's not just a little, touch here or there. It's a nice, good move higher. The stochastics is well in the upper reversal zone. So very strong move from that perspective. The DMI is showing a directional move well above 30, well below 20 on the positive and negative respectively. You look at the RSI and the CCI, they're also showing you directional signals, breaking out above 200, breaking well above 60, almost a 70 there. The Bollinger Bands, we have already broken below the Bollinger Band, third day in a row with a rising bandwidth, so we're kind of starting to expand away. In fact, if you look at them with the Keltner channels, where the bands are outside the Keltner channels, and the price, is outside the Keltner channels, and the bands are breaking out outside after being in them for so long. You can see the red line here, or red dots for so long, which basically means that you're sideways. Now we're breaking out with big, the light blue lines and a green dot, first green dot that we've seen in a while. Usually you don't see that. Like, to get a green dot when you're just barely starting, you can kind of see some of these other examples when you're just starting, some green, green dots that can lead to a pretty decent bullish rally for a while, right? So, again, how bullish are we from a broader perspective? Who knows? We don't know if we're gonna, it's gonna be that bullish, but that's not the only kind of bullish trade we can make, right? We can come over here and say, okay, let's sell that 115 put. It's about as close to a mid-30s delta as we can get, and buy the 110 put. Even with earnings coming up, we'll position size for a regular. You can see the options aren't really too concerned about the earnings. There's the right kind of mid to high 20s all across the board here. So the market's not too concerned about its earnings announcement there before August expiration, and again, full position size going for about $447, which means that's about as much as I'm willing to lose. And for me to lose that right now, we'd have to drop all the way over here to 109.5, below 109.5, and that's way down here. So we'd have to pretty much negate this little breakout, break that strong volume node for support below us, and then keep going down in that gap. So that would obviously be we wouldn't be bullish anymore if we were to get that pattern. So we'd want to be out of this trade anyway. So nice, good bullish breakout pattern. The kind of pattern normally I would actually buy a call on, or at least do a long call vertical. But considering the market environment, I'm a little hesitant to be too directionally bullish. But this kind of trade can give us enough bullish deltas here, as you can see, 53 bullish deltas net. If I were to beta weight this to SPY, then, and here let's go to where is Starbucks, all the way down here. So if I were to look at Starbucks there, you can see, okay, let's take all these off and just look at Starbucks. We have 13 SPY deltas, beta weighted deltas. So it does give me some positive without being too, abnormally bullish right now. All right, so that wraps us up for today. You've heard from me, now I want to hear from you. Use that link that's popping out in the top right corner of your screen. That takes you to our Market Outlook forums. All of our subscribers, even our free subscribers, have access to that. So feel free to open up any new threads there with any questions or comments you have about what we discussed in the video. Reply to other people's threads. Let's keep this conversation going in between. As always, thank you very much for watching. Remember to subscribe to our YouTube channel. Hit that thumbs up icon, as well as like us on Twitter and Facebook too. Comment on the video. Have a great rest of your Wednesday night, everybody, and we'll see you all tomorrow.